Welcome back to Investing Talk Podcast. We're your shortcut to getting genuinely well-informed, helping you cut through all that noise. We take a stack of sources, pull out the key insights, the surprising bits, and talk it through. Today, our focus is on Lumentum Holdings, specifically their upcoming earnings report. It's one of those key moments for the stock that many are watching. We've gathered some pre-earnings analysis to really try and understand what's going on with them. And hey, if you find this kind of analysis useful, please do subscribe, like the video, maybe leave a comment. It really helps us out. And if you're feeling generous, you can always buy us a coffee. The link's below. Plus, seriously, if there's a company you want us to look into like this, drop it in the comments. We do read them.
Absolutely. And earnings reports, well, they can be dense, right? Lots of numbers, jargon. Our goal here is really to filter that, highlight what actually matters for understanding where Lumentum stands right now.
Okay, let's get into it then. Lumentum. First off, the basics, when is this report actually coming out?
Right, so the date to market is August 12th, 2025. That'll be after the market closes. And the earnings call itself is set for 5 p.m. Eastern Time.
5 p.m. ET. Got it. So what's the street thinking? What are the analyst expectations looking like, especially earnings per share?
Yeah, the EPS consensus, it's quite a spread this time. The range goes from about DL2 53 cents up to 81 cents.
81 cents. Wow, that seems high compared to recent numbers.
It does, doesn't it? That $1 and 81 cent figure, it really jumps out. It could be an outlier, maybe even a data input error somewhere.
Yeah.
Considering their last reported quarter was what, 57 cents? Yeah, $1.81 is a big jump. And interestingly, the sources we looked at didn't give an explicit revenue consensus figure. So that's a bit of a question mark.
Huh, no revenue number. And what about the whisper number? Any unofficial chatter in the sources about where earnings might land?
No, nothing explicit surfaced in what we reviewed. No whisper number mentioned. So we're really just working with that official range, keeping in mind that caution about the high end. It's also worth noting the company itself, Lumentum, they didn't give specific number guidance for this quarter ending June 2025. The last actual number we have from them is at $1.57 EPS for Q3 fiscal 25. And that did beat the consensus, which was $1.50 back then.
Okay, so they beat last time. That gives us a recent reference point. So how's their track record generally? Do they tend to beat these estimates?
They do, yeah. Lumentum has generally beaten the consensus estimates in the last few quarters, but often it's been modest beats, not huge blowouts. That Q3 beat, the color's 57 versus Q50, that was at a 14% surprise. Yep. So respectable.
But here's the thing that caught my eye. They beat sometimes by a decent margin like that 14%, but the stock reaction afterwards, it often seems kind of muted, no big sustained rally. What does that tell you?
That's a really sharp observation. And it suggests, well, a couple of things. Maybe just caution, or perhaps the beats were already sort of anticipated, priced in by the market. But it could also point to something deeper, like maybe the market's more focused on the headwinds in their sector, like the telecom spending issues we know about.
So even if Lumentum does well internally, the markets may be holding back because of the bigger picture for optical components.
Exactly. It's like their good execution is being overshadowed by sector concerns, especially on the telco side. They're swimming against the current, so to speak. So the market might be saying, nice job, Lumentum, but show us the whole sector is improving before we get really excited. Still, you have to acknowledge the year-over-year growth. Q3 fiscal 24 EPS was only $0.29. Getting to $0.57 in Q3 fiscal 25 is, well, it's strong progress. And management has definitely been talking up their focus on profitability, on improving operating margins since, the challenges back in 2023.
Right, that profitability focus is key. Okay, so shifting to the specific quarter they're reporting on, calendar Q2. Anything major happen, new products, big news in their specific markets?
Didn't see reports of any major new product launches during that period. Lumentum's really focused on their core optical networking photonic components, and that puts them right in the middle of that duality we mentioned.
The two different forces acting on them.
Yeah. You've got the positive pull from cloud and data center spending. That's strong, especially with all the AI build-out happening. That needs their components. But then you've got the negative push or maybe drag from the telecom sector cutting back on capital spending. Telcos just aren't upgrading networks as aggressively right now.
So good news from cloud, bad news from telco. A real mixed bag.
It really is.
Yeah.
And then layer on the broader macro picture. Concerns about interest rates potentially staying high, maybe slower global growth.
Yeah.
It creates this environment where, yes, AI demand is a huge tailwind, but these other factors are definite headwinds. It's a balancing act for them.
Makes sense. And what about the analysts covering the stock? Have they changed their tune recently? Any big upgrades or downgrades heading into this report?
Not really seeing major shifts, no big upgrades, no big downgrades noted in the sources for this recent quarter. The estimates seem pretty stable, maybe tilted slightly positive after that last earnings beat. It feels more like cautious optimism, not strong conviction either way from the analysts right now.
Okay, cautious optimism. And what about the stock price itself? How has Lumentum been trading lately, leading up to the 12th? Any clues there?
The price action's been pretty tame, actually.
Yeah.
Sort of sideways, maybe drifting slightly higher, but nothing dramatic. No big run-up suggesting everyone's expecting amazing news, but also no sell-off like people are bracing for disaster. It echoes that caution we keep talking about.
Muted action. Okay, for listeners who might trade around earnings, what are the key technical levels? Where's support? Where's resistance?
Good question. For support, you'd probably look around the $38 to $40 level. That's near recent lows, areas where buyers have stepped in before. On the upside, resistance looks like it's clustered around $45 to $48. There might be a gap fill in there. Plus, it's near where the stock peaked after some previous earnings reports. And here's something interesting. The options market, looking at implied volatility.
What the options market thinks the stock might move.
Exactly. It's pricing in a potential move of roughly plus or minus 8% to 10% right after the earnings come out.
8 to 10%. So the options market is expecting a decent swing, even if the stock price itself has been quiet beforehand.
Precisely. It suggests traders are expecting some kind of news-driven volatility up or down.
Okay, let's game this out then. What would a really strong report look like? What's the bullish case?
Bullish case. Well, obviously, you'd want to see them beat estimates on both EPS and revenue. But crucially, yes, exactly. Forward guidance needs to come in clearly above what analysts are currently expecting for the next quarter. You'd also want to hear positive commentary, specifically about accelerating demand from those cloud and AI customers. That's the growth engine. And any proof of continued margin expansion showing that profitability focus is working, plus maybe some new customer announcements that would all be very bullish.
Right. And the flip side, what would a bearish report look like?
Bearish would be, well, a miss on the top or bottom line, so revenue or EPS coming in short, or, and this could be just as damaging, even if they meet current quarter estimates, if they issue weak forward guidance, that often hits a stock hard. Also, listen for any talk about prices getting tougher, more competition, or if that telecom demand looks like it's weakening even further. And of course, any sign that margins are shrinking instead of expanding, or if inventories are piling up, those are definite red flags.
Okay, lots to watch for. If you had to pick just one thing, the single most critical piece of information in this report, what would it be?
The single most important. I'd have to say it's the forward guidance for revenue and EPS. That's what the market will likely react to most strongly. And tied to that is the commentary around demand from those two key customer groups, hyperscale cloud and telecom. Where do they see things going?
Future outlook is key. Okay, so wrapping this all together, based on everything we've looked at, what's the overall leaning here? Bullish, bearish, neutral?
I'd say the overall leaning based on the pre-earnings analysis is neutral. If you forced me to put a number on it, maybe a 5 out of 10 on a confidence scale.
Neutral, 5 out of 10. Why so middle of the road?
It really comes down to that balance. You've got the positive points. They have been beating estimates recently, showing good internal execution. But that's countered pretty strongly by the cautious sector trends, the telecom weakness, the macro concerns, and that muted stock price action leading up to the report. The headwinds seem to be largely offsetting the internal progress, at least in the market's eyes right now.
Okay, a neutral stance makes sense given that tug of war. So for listeners thinking out this company, maybe they own it, maybe they're considering it, what are the strategic takeaways?
It depends a bit on your risk tolerance, right? If you're generally risk averse, given that the options market is already pricing in a fairly large move, maybe just staying on the sidelines through the earnings event makes sense, see how the dust settles. Or if you use options, maybe you look at defined risk strategies, like selling an iron condor if you think the stock will stay within a certain range despite the volatility expectation. Or maybe buying a defined risk straddle, sometimes called an iron butterfly, if you expect a big move but want to cap your potential loss.
Okay, so ways to manage the risk. What about for someone more willing to take on risk?
For someone more risk tolerant, you could look at a standard straddle or strangle, buying both a call and a put. That plays for a big move in either direction. But, and this is key, you'd only do that if you strongly believe the actual move will be even bigger than that plus or minus 8–10% the options market is already implying. You need volatility to exceed expectations for that to really pay off.
Right, you're paying a premium for that expected volatility.
Exactly. And then for long-term investors, people holding for the fundamental story, well, you probably only want to hold through earnings if you have really strong conviction in Lumentum's market position and that recovery story, especially believing those telecom headwinds will eventually ease up. You have to acknowledge earnings always bring risk, and right now it feels pretty balanced.
That's a really clear breakdown of the considerations. This has been a fantastic exploration of Lumentum heading into the report. Really appreciate you helping us unpack all that.
My pleasure. It's a complex situation, definitely worth examining closely. And maybe a final thought for everyone listening. We've talked a lot about Lumentum's own execution versus these broader market forces. So the question to ponder is, how do you weigh those things? How much importance do you give to company-specific performance versus the sector trends and the macro environment when you're looking at a stock like Lumentum?
That's a great question to reflect on. How do you balance the micro and the macro? Excellent food for thought. Thank you again, and thank you all for joining us on Investing Talk podcast. Keep digging, stay informed, and we'll catch you next time.